The policymakers and the regulators, they are essential key to our progress, development, and achievement thus far.
A lot has been done till this moment, but I think a lot more can still be done.
We don't have international banking license, so it means we cannot play in that space at all.
As conversations around the growth of non-interest finance continue to gain momentum in Nigeria, one question remains central. How effective has regulation been in shaping the progress of the industry? Hello and welcome to Islamic Finance Weekly. I am Rahma Say Mohammed. To get a sense of this, we will speak with key stakeholders and enthusiasts within the non-interest finance space to understand their perspectives on the role of regulators and policymakers and what more can be done to unlock the full potential of the sector. Watch.
I think for regulators, we need to try as much as possible to look at inclusivity. How can we the rapid approval of products from the phrase side, let's say from CBN, and also looking at TACAFO as well. We need more products, so regulators can actually do more in terms of strengthening that to be able to have a very good and robust system. Non-interest finance is huge, and the regulators have really done so much. They will say that we can only ask them for more. However, we believe that there is still so much to be done. And in terms of fintech as well, now that is where everything is going. I believe that it will also interest you that the non-interest finance as well, the operators are building, fintech products. This will also see if we can get regulations upon, non-interest finance fintech products, to be able to guide the operators that will be operating in this space as well. So I think these are the things I feel the regulators can do to enhance the system.
So, for example, we don't have international banking license, so it means we cannot play in that space at all, right? So, we want to be able to solve that problem. What level of capital will be convenient for us to play in international banking space? Custodian bank, we don't have custodian banks. None of the non-interest banks are custodian banks. So it means that I want to be able to play in that space. Capital from capital market players has gone up very quickly recently. We tried to propose a perpetual Mudaraba Sukuk, for example. But again, we're still struggling with that. Want something that can allow players, have an agreement with the regulators on these core issues. And particularly, lastly, is product standardization, right? One standardized product, maybe not all of them, but some generic products. We want regulators to feel us and, help us achieve this. These are the main things we think we must address at this point with regulators.
Let me start by, first of all, acknowledging the fact that the regulators in Nigeria have played a vital role in non-interest finance in Nigeria. Yes, I must also say that in the recent time, the FRC, Financial Reporting Council of Nigeria, has also taken a bold step to integrate some standards, NIOFI standard in particular, into the Nigerian framework. So, given all of this, it's showing quite well that the regulators are playing very quite role to ensure that the non-interest finance continues to grow and all that. But the only thing we just need to add here that there should be continuous stakeholder engagement. There's still like a huge gap between what the non-interest finance stands for and what some part of the populace conceive it to be. So we need to quickly bridge this gap as much as possible to ensure that it is embraced and it's not something that is targeted as a particular religion. It is a business model, a new business model, not known to most people. So we need to bridge the gap to ensure that people get to know about non-interest and they embrace it.
It can be done when you have this collaboration between the operators and the regulators. It has always been a matter of wait, let's see how they do it on the part of regulators. But now, when we have this collaborative effort, whereby those who are operating can see what they are facing, and then the regulators who must have the interest of the consumers at heart will now see how best to regulate. And it's going to be a win-win solution for everybody.
A lot has been done till this moment, but I think a lot more can still be done. We know that currently in the financial ecosystem, we have regulators recapitalizing the whole financial ecosystem, and I think there needs to be a lot more engagement to also understand some of the peculiarities of the non-interest financial players in the markets. The banks just closed theirs. The SEC from the capital markets is currently ongoing. I know there are current engagements with the regulators. We have the NICOM as well as the pension aspect of things. So I think one distinctive factor I think I would want to see, particularly from both sides, that is the regulator and the operators, is more collaboration. Regulators understanding the peculiarities of the players, and the players ensuring that they're able to meet a middle ground to ensure that at the end of the day, we are able to deliver competitive products and not necessarily maybe be a second fiddle, as it were. Case in point, the current SEC recapitalization. I know there has been dissenting voices around the magnitude of the capitalization, and I think it's important for both the regulators and the operators to meet, to discuss, because at the end of the day, we are all here because of, should I say, the customers to be able to deliver value at the end of the day. So in all, there has to be an alignment and ensuring that it's a win-win for both parties.
They are supposed to actually create a conducive environment for non-interest financial institutions because the NIFI actually is operating within a legal space. There has the conventional financing operating in, and the legal framework that we had before now has been essentially solely about the non-interest financial institutions, about the conventional financial institution. So, as is the case in many countries of the world, like Malaysia, the United Kingdom, provisions have been made to actually secure the interest of non-interest financial institutions to make them able to develop, create a level playing space for them. An example is tax neutrality, because you have some products, for instance, in non-interest financial space that requires contract on the same subject matter, more than one contract on the same subject matter. And when you have such exchange, the such exchange is supposed to be taxed. So I believe the FRS, which is now NRS, has taken care of that. But a lot more to be done, even in other areas of taxation like value-added tax and some others. So in that case, the regulatory authorities have to pay attention to that. We now have the Tax Reform Act in Nigeria. So this is the kind of thing that NIFI, for instance, has a role to play so that it can be an interface with the NRS, Nigeria Revenue Service, so that issues like this could be canvassed. Then NRS could look more into its books and ensure that the interest of the non-interest financial institutions protected in a way that they afforded the opportunity to operate on a level playing field. That's when you can see profitability, you can see progress in the non-interest financial space.
The policymakers and the regulators, they are essential key to our progress, development, and achievement thus far. Basically, all the financial regulators in this country, they have emphasized, collaborated with non-interest financial institutions Association of Nigeria. Basically, all of them. Now, look at the development financial institutions. Almost all of them, they have imbibed and embedded the non-interest finance product and services. So and there's regulations, guidelines by all the major financial institution regulators. Look at the Central Bank of Nigeria being the key driver. It has been for the last 15 years, 2010, to 2011 till now. We're talking about 16 years or 15 years of support, policies, and regulatory oversight. Look at NICOM, PENCOM, all of them. Look at Securities and Exchange Commission. They are all involved, our partners, and they have been helping us. So we cannot say thank you enough for them. They are our integral partners.
We enjoy a lot of cooperation from the policymakers. Let me start from the regulators. They listen, they engage. Before they go to the market, they engage the operators just to understand it from the operational point of view. So they do not just roll out the policy into the market and say everybody comply. And even when they do, and you have feedback, and you give the feedback to them, they also give that listening here. We believe this is the right approach for the market to grow. And that cooperation and listening here from the regulators, I think is really helpful. Because we see a regulator is an extension of government. Even from the government level, we also see a lot of interest to develop the industry. A lot of things are coming into the market. We see the policy around the sukuk, and we also see a growing interest from the government to support in deepening the market in the product development. And we've also seen different initiatives from the government organizing a halal economy conference whereby different stakeholders are assembled in the same place to think about the future of non-interest industry. I think that has been a tremendous support. But it's still, the industry is still young. It requires a different approach. It might also require a lot of a radical approach to support and to grow the industry. I believe that the engagement that we are currently having now and the synergy that has been created between the policymakers, between the operator and the regulators, we go a long way in expanding the industry. But we can always ask for more. But I think the support is always right there.
Clearly, while there is recognition of the efforts made so far, there is also a strong call for deliberate forward thinking and enabling regulations to drive the next phase of growth. From policy clarity to innovation support, the message is clear. The future of non-interest finance in Nigeria will depend largely on how well regulation evolves to meet the needs of a dynamic and expanding industry. And as we've heard, stakeholders are not just observing, they are ready for progress. And with that, I say, don't forget to keep updated with us next week on the program. Follow us on all of our social media platforms displayed on the screen. Thank you for watching. And as always, I am Rahma Say Mohammed.